Hello students, welcome to my YouTube channel Rising Sun. Today we will discuss on the concepts of introduction to partnership and partnership final accounts. So we will be discussing the concepts of final accounts, its preparation in partnership firms. So first, what is important is to know the meaning of final accounts. By final accounts, we mean balance sheet and profit and loss account. Balance sheet and profit and loss account both together form final accounts. So for every business organization, it's very important to prepare both these two things. One is balance sheet, which is not an account but a statement. Balance sheet is not an account but statement, and profit and loss account is a account. It's a nominal account. Now we know that final account means balance sheet and profit and loss account, but now we will also have to know why is it to be prepared. What is the use of preparing balance sheet and final profit and loss account? So balance sheet is prepared to know the financial position of a business organization. What is financial position? Financial position is to understand the details of the assets and liabilities of the business as on a particular date. How financially the company is strong or whether it is weak, you can understand it by reading the balance sheet. So balance sheet will constitute of assets and liabilities. And the importance of profit and loss account or profit and loss account is prepared to know how much profit has the organization earned. How much profit has the organization earned, or what is the loss it has incurred. So profit and loss account will let us to know the profit or loss, profit earned by the business or loss incurred by the business. So these two accounts are to be prepared, which we are going to study in this chapter. Students, in this video I am only going to discuss the very basic concepts, because if you are fundamentally and conceptually strong, you can understand the more advanced topics. So this video we will have a very basic understanding of this chapter, and in my subsequent videos I will go into more detailings. Now we will know how, or we will understand how to prepare the final accounts. Now as we have understood what is final accounts, we will now try to understand how is it to be prepared. So final accounts are prepared with the help of trial balance. To prepare the final account, you need is trial balance. Now what is trial balance? Simply trial balance is a statement. Trial balance is a statement. And what does it have, or what does it consist of? It consists of the balances of all ledgers. Trial balance consists of the balances of all ledger accounts. Now when I tell about all ledger accounts, so all means all the accounts which are of either personal accounts, all the personal accounts which we have studied in standard 11, real accounts and nominal accounts. So balance sheet, the trial balance will have the balances of all these personal, real and nominal accounts balances. Now with the help of trial balance, we can prepare balance sheet and profit and loss account. Now in this chapter, you are going to prepare the final accounts of the partnership firm. So partnership means in that firm either minimum there will be 2 partners and maximum there will be 50 partners. So in a partnership firm there will be minimum 2 partners and maximum 50 partners. So the chapter 1 of the syllabus for standard 12 is introduction to partnership and partnership final accounts, where you are expected to prepare balance sheet and profit and loss account. Now to prepare balance sheet and profit and loss account, you are given trial balance in the question. You will be given the trial balance. The question will constitute of trial balance, and from that trial balance you have to prepare balance sheet and profit and loss account, which is the part of your answer. So question will be trial balance and answer is balance sheet and profit and loss account. Now let's see a trial balance. Here in front of you is a trial balance of a partnership firm. Okay, this is the trial balance of the partnership firm, and this trial balance consists of debit balances and credit balances. Trial balance will consist of the names of all these ledgers. These are the names of the ledger accounts, and balances. These are the balances. There will be either debit balances or credit balance. Now, one important thing you have to remember is that the debit balances, these ledger accounts with debit balances in the trial balance will either be assets or expenses. The accounts with debit balances or the accounts in the debit balances will be either assets or expenses. So by asset I am meaning capital expenditure, and by expenses I am meaning revenue expenditure. And the balances of the ledgers in the credit balances will be either liabilities or income. So when there is a trial balance in front of you, it will consist of the balances of assets, expenses, liabilities and income. Now what is important is you have to identify the ledger balances. Out of these four, you have to classify the ledger balances, whether it is an asset, whether it is an expense, is it a liability or a income. So one important thing is that all expenses and assets will be shown in the debit balances of the trial balance, and all liabilities and income will be shown in the credit balances of the trial balance. So while solving the problem, you have to refer the trial balance and you have to post the amounts of the ledger balances either in asset or liability, which will be in the balance sheet, or expense or income, which will be appearing in P&L or profit and loss account. So one thing important is that the balance sheet will consist of only liabilities and assets. And profit and loss account will have either expenses or income. So with the help of the trial balance, just what we have to do is to identify each and individual ledger and post it in either balance sheet or profit and loss account. Now for example, we will see here, when I am considering this account stock, so stock is appearing in the debit balance. So what is it? It's a asset. Stock is an asset, and since its position is on 1st April 2018, you have to show it as a opening stock. Now but since this is an opening stock, it will be appearing in the debit side of the trading account. Opening stock is always shown in the trial balance. Opening stock is always shown in the trial balance. But since this is the opening stock, you will not show it in the balance sheet, because the balance sheet you are preparing is as on 31st March, and the value of the stock here given is 1st April 2018. So since this stock is valued as on 1st April 2018, that is the closing of the previous year, it will not appear in the balance sheet which you are preparing as on 31st March 2000, whatever it may be. You are preparing as on 31st March. So basically 65,000 here will not appear in the balance sheet, but instead this will appear in the trading account. Opening stock will always be appearing in the trading account. Similarly, bills receivable. See, when you are considering the debit balances, you have only two choices. When you are considering debit balances, you have only two choices. The balance of the account will either be an asset or expense. You have to decide among these two. Now see, bills receivable. When I am talking about receivable, it is an asset. Payable is a liability, receivable is an asset. So 28,000 will be shown in the asset side of the balance sheet. Similarly, you can see wages and salary. Again, you have only two choices. When you are in the debit balance, you have two choices. Either it will be asset or expense. Now, wages and salaries are what? They are expenses, because these are of revenue nature. It will occur frequently. So, this will be shown in the expense side. Similarly, you can see next comes sundry debtors. Sundry debtors are what? Assets. So this will go to the assets. Bad debts. Bad debts is the money irrecoverable from the credit customers. Bad debts are what? Bad debts are the money irrecoverable, which you are not going to be recovered. It's your loss from credit customers. Goods sold to the customers on credit and the money receivable from them is irrecoverable. So it's a loss. So since it's a loss, it will go to what? Profit and loss account. In this way, you have to identify when you are in the debit balance, you have to identify whether it's an asset or an expense. When I am talking about expense, it's expenses or losses. And credit balances you have to identify whether it's an liability or is it an income or gain. Expense and loss, income or gain. Let's quickly identify individual. Purchases, see, it's an expense. Motor car, it's an asset. Machinery, asset. Audit fees, expense. Sales return, see, this is the returns by the customers to whom you have sold the goods. Sales return means what? The goods which has been sold to the customers is returned by them. So what will this happen? You have to remove these 2000 from sales. So sales returns will be subtracted from sales. Similarly, discount. Remember, discount is appearing in the debit also and discount is appearing in the credit also. So discount appearing in debit balance. What I told you is when you are in the debit balance, you just have to focus whether it's an asset or is it an expense or loss. So discount is definitely not an asset. What is it? It's a expense or loss. So since this is appearing in the debit balances, it's discount which you have allowed to the customers. This is discount allowed to the customer. It is expense or loss. Similarly, the discount here is appearing in the credit balances, which tells us that this is an income, because as I told you, when you are in the credit balances, it will be either liability or income or gain. Now since it's not a liability, discount is not a liability, this is discount which you have received. So this will be income or gain. In this way, what is very important initially is you have to practice to identify the ledgers into assets, liabilities, expense, income. This is a very important stage, first step of solving the problem. Then building, see here it's a asset. Cash at bank is also asset because cash itself is an asset. 10% investment. See, investment is an asset because investment has a potential to generate revenue or income. It has a potential to generate income. And what 10% here given? It's the interest which you are going to receive. In this way, you first have to identify the nature of the accounts. Advertisement, it's an expense. We will talk later about these adjustments. In this video, I am going to discuss only the simple concept. In my next videos, I will move on. I will discuss and teach all the different types of adjustments and some more complicated entries. But this video will be very basic. Then see royalties. Royalties, definitely it's an expense. What is royalty? Royalty is a fee paid to understand, to know the technical know-how, to get the technology from the person or the organization, to get the technology may be production technology. To get that, you have to pay some fees to that organization. That fee you are paying is royalty. Now see, we have finished debit balances. Here you can come to the credit balances. When I am in the credit balances, I am only considering whether these accounts are liabilities or income or gain. So here you can see, first is general reserves. General reserves is liabilities. Now what is general reserve? What is general reserves? So general reserves are the reserves created by the business organizations from the profit. So what does the organizations do? Every year out of the profit, some percentage of the profit is not distributed or given to the owners in the form of the dividend, but instead they are retained or kept by the company with itself in reserves. So reserves, general reserves are simply undistributed profits. These are undistributed profits. Undistributed profits. So every year companies, organizations, what they do, they retain some percentage of profit in their account named as general reserves. So slowly what happens, the company starts to have reserves with it, which increases year by year due to transfer of profits from the profit which it has earned. So general reserves, students, is nothing but undistributed profit, and it is a liability because profit itself is a liability, remember. Hence general reserves is also a liability. Here you can see the balances of the partners. So capital. Now again here when we are in credit balances, we are only going to find out whether it's a liability or a income or gain. So capital is definitely a liability. Capital is a liability. Creditors. Creditors are the persons or the institutions from whom we have purchased goods in credit. Liabilities. Reserves for doubtful debts. See students, reserves for doubtful debts has been given in the trial balance itself. So what is RDD? It's a reserve which you are again generating on prediction of some debtors which may turn into bad in later stages or later dates. So RDD here given in the trial balance is old provision. You are making a provision of 1800 here. It's a old provision. Similarly, sales. What is sales? Sales is an income. Outstanding wages. Remember students, any expense outstanding is a liability. So it may be wage, it may be rent, it may be salary, whatever it may be. Any expense which is outstanding is liability. If it's only wage, like here, it is expense, but outstanding wage becomes a liability. See, hence it is appearing in the credit balance. Only wage is appearing in the debit balance, but any expense outstanding will definitely appear in the credit balance of the trial balance because it's a liability. Similarly, purchase returns will be subtracted from purchases, and discount here, as I had discussed, is appearing in the credit balance, so it's a income or a gain. So what is important is to identify the balances of the accounts into different areas, like whether it's a asset, liability, expense, income. This is a first step. Students, this is the first step in preparing the trial balance. You should understand, you should identify whether the given ledger is an asset, whether it's a liability, whether it's a expense or income. Now after identifying this, what we have to do straight away is to post that particular balance in the respective account. Like if you have identified a particular ledger account balance as an expense or income, it will be recorded in profit and loss account. And if you have identified a particular ledger account as an asset or liability, it will be recorded or shown in the balance sheet. Now what's important next is, after identifying this, one more thing is important, is that the expenses or the income have to be further classified into direct or indirect. Expenses, 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 expenses. Here income has to be classified whether it's a direct or indirect, because all the direct expenses will have to be shown in the debit side of the trading account. Expenses, direct expenses will be shown in the debit side of the trading account, and direct income will be shown on the credit side of the trading account. Hence we have to classify, we have to identify. Now what's the basic criteria to identify whether a particular ledger balance is a direct or indirect? So all the expenses which are related to the factory, all the expenses which are related to the factory or manufacturing are direct expenses, and the income generated by the organization due to its operation, due to its production, is direct income. So what happens now is you have to identify whether a particular expense is direct or whether it is indirect, whether a particular income is direct or indirect. Now, since you have to classify the expense or income into direct and indirect, then you have to prepare trading account and profit and loss account. Trading account and profit and loss account. Both the accounts are of nominal nature. Both the accounts are nominal accounts. So students, both, it may be trading account, it may be profit and loss account. So trading account or even profit and loss account, both are nominal account. So all direct expenses will be debited to trading account, all indirect expenses will be debited to profit and loss account. Expenses will definitely be debited, but what is important is to classify the expenses into direct or indirect. What is direct? All the expenses which are related to the manufacturing or factory are direct. So those will be shown on the debit of the trading account, and all the expenses which are not related to the manufacturing or which are related to after the production of the goods. After the production of the goods, the expenses incurred after production activity are indirect. They will also be debited, but to profit and loss account. So in this way, before recording or preparing the balance sheet and the profit and loss account, you have to classify the ledgers into these various types of accounts. So students, in this video I have just covered the very basic concept of this chapter. In my next videos subsequently I will start to discuss more deeply, and then I will be solving the problems on the final accounts. What is important in any chapter, students, is to understand the concept behind that. When you understand the concept behind the particular topic, you will be able to solve the problems more comfortably. So students, hope you enjoyed these videos. Hope this video was useful to you. If you find this video useful, please like, share and subscribe my channel. I will put another video which will be in more details related to this chapter. Okay, thank you students for watching my video.